Good evening, guys. It is Thursday, January 30th, 2025. This Bathrobe business. I got some decaf coffee because it's the evening, and I got the news. So the last video of the day, of the week, well, I guess of the day as well, but of the week. And there's a lot happening in the market. This has been a very tumultuous week. And it's almost like, I don't want to say I saw it coming, but I feel like everybody in the market kind of felt that there was the Nasdaq, the Dow Jones, the New York Stock Exchange, everything was just too high. That it had to be a little bit of deflation. That everything wasn't so rosy, and I think that pullback has been happening throughout the week with multiple things and multiple stories that we've covered on this channel. First thing I want to talk about is going to be gold. Gold hit an all-time high. So a couple of weeks ago, this was actually pre-election. I believe gold hit about 2740. It is now up above 2,800. I'm not sharing my screen. So gold is at 2852. As I always talk about on this channel, gold is a very, 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 very powerful metric. It is not to be neglected. Everybody thinks it's antiquated because of commodities like Bitcoin and other crypto, but gold is incredibly important. Just to give you a reminder, during the 70s and 80s, all this crazy inflation that we heard about, Paul Volcker, Richard Nixon, oil crises, Jimmy Carter, all that inflation was less than what we've seen now. Because at the time, gold hit about $700 to $800. That was their all-time high, right before it started plummeting. Now, if you account for inflation, that number would have been 2,600 by today's standards. We have been above 2,600 for a while now. We were technically supposed to hit 3,000 last year. Now, I guess that's a bit of a red herring because you can't just predict a number like that. But many analysts were saying that gold was going to hit 3,000 last year by the end of the year. Goldman Sachs made a big stake on it. But it looks like that's definitely going to happen this year for sure. We talked about I believe that on the channel early in December, that it was probably going to happen at some point in 2025. I would say before the end of the second quarter, we'll see a $3,000 number. And it's not a surprise because as we talked about on this channel, the Central Bank of China is heavily purchasing in gold. Russia is doing something with gold. It is something vague. I'm not going to go into it. They're essentially backing their currency with gold now. How true that is, I'm still actually not sure. Everything you listen to just sounds like propaganda, either from the State Department or from the Russian Federation itself. But there is a certainty that gold is at play in some capacity within the backing of the ruble. So why is gold doing this? Well, it's mostly because of tariffs. So Donald Trump has announced that and this isn't too much of a surprise because it's been forecasted for a while, but Canada and Mexico face 25% tariffs as soon as Saturday. His argument for Mexico is, of course, immigration. His argument for Canada is trade. It is unlikely that anything is going to change before the weekend. I don't think that the border of Mexico is going to close that quickly, and I don't think Trudeau is going to renegotiate an entire trade deal. So we can almost anticipate a 25% tariff on any good coming into the United States from Canada or Mexico. What's strange is I still haven't had anyone explain to me why he's doing. I shouldn't say why he's doing this. I don't understand how this is happening with the renegotiated NAFTA. So NAFTA was the original trade agreement between the United States and Canada. It was actually started under George H.W. Bush, but passed under Clinton. It had been in place up until the first Trump administration when he renegotiated. It's technically not called NAFTA anymore. It's called something else. But the whole point of renegotiating it was to do this, to get more favorable trade policy for the United States. So I have yet to have any economist or any news story explain to me why this is happening when we just had this renegotiated about 4 or 5 years ago. And if this is in violation of NAFTA, because I think that the Canada and Mexico could take us to the World Trade Organization and say that we're violating the terms of the agreement. Again, nobody is talking about that. Everything's being very political, of Democrats shaking their finger at Trump going, oh no, look at what you've done. And Trump saying this is the greatest tariff ever. But nobody's actually getting to the meat and the potatoes of what's happening. But it does appear that these tariffs are going to go into place. Next story I want to talk about is kind of in parallel to that. It discusses the U.S. Economy in 2024. So U.S. economy wraps 2024 in a 2.3% growth rate. Uh, Not the best growth rate, in all honesty. It's not terrible. 2.3% is appropriate, but it does pale in comparison when you compare us to countries like China, which have yearly targets. So the federal government, well, not the federal government, but the CCP actually sets manufacturing and production goals for GDP growth, and they missed it in 2023, but they definitely hit it in 2024. They grew at about 5%, so they grew at twice the rate that we did, and maybe that's why they created AI in like a weekend, and why their electric cars are taking over the country. This article doesn't talk about much. It's mostly a political piece. Axios is actually fairly political, especially anti-Trump, which again, not a huge Trump supporter, but the article makes a point to underscore that Trump is inheriting an amazing economy. And not to say that the economy is abysmal, but I think the economy, like I said at the beginning of the video, has some major weaknesses. And 2.4% growth is nothing to boast about. The biggest question is going to be, what is Trump's tariffs going to do to this? Is it going to be a positive effect? Is it going to be a negative effect? Is it going to have no effect at all? Trump is banking on the fact that with all this additional revenue coming in from taxes, from tariffs, that he is going to be able to offset taxes domestically. And because of that, we're going to see massive growth. Perhaps. It's an argument. I've kind of stopped listening to economists about good and bad because I've heard these stories all before. During the Trump administration, we were supposed to see a complete collapse of the U.S. economy. We didn't. And then during the Biden administration, there were 100% tariffs passed on most electronics coming from China, and no economist really said anything. So that's why I'm not really listening to the chatter. I am yet to see what happens. I'm not a huge fan of tariffs. I think that trade deficits are nothing to be feared. Just as an example, this isn't even my example. This is from a podcast called Part of the Problem, hosted by Dave Smith, a fantastic podcast. I listen to it religiously. But Dave Smith put it very eloquently. He said, I shop at Whole Foods a lot. So you could say that I have a trade deficit with Whole Foods because I go there and I purchase a lot of their stuff, but they don't purchase any of mine. That's essentially the argument of passing tariffs based entirely on trade deficits. It doesn't actually work that way. Just because you're purchasing something doesn't mean you're at a disadvantage. But that's Trump's whole shtick when it comes to the economy, right or wrong. So we'll see what it yields. I don't think it's as abysmal as people say, that the economy is going to have major slowdowns in growth, but I don't think it's going to be as rosy as Trump points out to as well. Next story I want to jump into is going to be Apple. So Apple had a mixed quarter. We have to report on Apple just because it's such a behemoth. So with their growth rate, they had pretty good numbers. So in the last quarter, they did see earnings per share increase from an estimated $2.35 to $2.40. Overall revenue estimated was 124.12 billion. That's a massive number. And they actually beat that earnings by 124.3 billion. However, the market isn't reacting all positively to Apple, and that is primarily because iPhone sales. So it's not a surprise. Even just the other day, we reported on a story that iPhone sales were going to be down. They are underselling what they used to. So the estimated Wall Street consensus was they were going to have 71.03 billion in sales of new iPhones, and they only came in at 69.14, 2 billion shy of that. Their Mac revenue was better than anticipated. iPad was even better than anticipated, but that iPhone number can't be ignored because that is one of their primary driving sources of income. And what's also very terrifying is their Chinese sales keep declining year after year. So China declined another 11.1% in the fourth quarter. Just in the fourth quarter. Let's not forget, they are now in third place in China. They used to hold the top spot, but Hawaii, I can never say it when I'm on camera. Hawaii. Anyway, you know who I'm talking about. are beating them. And then there's another company, I think it's Vivo, is the other one that is beating them now. They're making chips domestically. They have fantastic operating systems, and the government is clearly pushing them there. And they're outselling Apple like 3-1 now. So now the good news with Apple is their services sector is growing pretty substantially. So their services are like their cloud storage, Apple TV, warranties, repairs, whatever it may be. That's all growing at a pretty steady pace. In fact, that's what kind of helped bolster their entire quarter. If it had not been for that, they probably would have been down and had a negative quarter because of that. They would have come in under Wall Street consensus. But that is their saving grace. Now, another thing that's interesting is where is that article? Another thing that is interesting, which is worth mentioning, is it's never a good idea to count Apple out, especially under the administration of Tim Cook. So I would still, despite all this weakness, qualify Apple as a strong buy. Tim Cook has had a better tenure at Apple than Steve Jobs ever did. Steve Jobs is definitely the innovator. He was the one that created this slew of products, but I don't think it can be disputed that Tim Cook is a GOAT when it comes to being CEOs. Apple has seen its greatest growth under his administration. It's seen the easiest growth under his administration. So it wasn't, we're going to innovate every year and come out with a new product and blah, blah, blah. No, he just manages assets and operations like a boss. The fact that they grew so much just through their services, doing absolutely nothing, like even so that the like App Store, that's a service. So they grew that. They're able to just make money without actually changing anything. So even though their iPhone sales are down, even though Mac sales can wax and wane, when it comes to their services and the infrastructure that they've built and reinforced and reinforced and reinforced, they just keep coming back stronger and stronger. This article does a great point of underpinning it because it talks about how much money would you make had you invested in Apple a year ago, 5 years ago, 10 years ago. We're not going to go all the way back to 1980. That's just crazy. But if you invested in Apple a year ago, you $1,000 a year ago would have given you a percentage change of a positive 26.9%, almost 27. So $1,000 in January of 30th of 2024 would give you $1,269. 5 years ago, they've seen 200% growth. So $1,000 would equal almost $3. And if you invested 10 years ago, which is kind of shocking to believe that that was 2015, that was well after Steve Jobs had passed, you would have been up 737%. And your $1,000 would be $8,373. And this is why I think Apple is still a buy, despite all this market weakness, despite the fact that they're losing in China, despite the fact that they can't really launch products like they used to. They have a mechanism for making money. They just have this powerful infrastructure where they are just going to give you returns on investment. So I still think Apple is a very, very strong buy. Last story I'm going to talk about is UPS. So very interesting story over there. So UPS shares tank about 14% after weak guidance. But what the guidance really is UPS is essentially cutting their relationship with Amazon in half. Now, it's no surprise that not every parcel UPS delivers with Apple is going to yield them money, especially some of those smaller ones. However, they obviously took a majority of the Apple's business simply because in the aggregate, they made money. But as Amazon has grown and developed their own infrastructure and their own delivery system, it seems it's becoming less and less profitable for UPS. So UPS is going to be cutting, 50%. Yeah, it's going to be cutting its volume by more than 50% by the second half of 2026. So a massive reduction in their operations. It's probably going to yield layoffs. It's going to be interesting what happens with this because just a year ago, UPS renegotiated a very, very sweet contract with their delivery drivers and their workers. It's going to be interesting to see what happens when a year from now they're fully restructured and those cuts start coming. That's pretty much it. That's the last story of the day. I hope you guys enjoyed today's podcast. I will be back here Monday because, as you know, I have a life, so I'm not going to be here tomorrow. So I hope you guys have a productive Friday and a fantastic weekend. I'll see you guys back here Monday evening. Bye.